Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Yeah, it was a good day for many stocks today. We've got some big winners once again. If you look here, let's take a look at KBSF first. That stock really took off, broke out on the daily chart above all the moving averages. And so now it's hitting the key resistance levels on the weekly chart. So if you look here at the KBSF daily chart, you can see the breakout here above the 200 and 300 day simple moving averages. And so the key now is to turn those levels into support. Notice the big pullback from high of day. The share price was all the way up here at 15, and so there's a long upper wick on today's candle. If the candles do pull back into the Bollinger Bands, because it did close well above the upper Bollinger Band here at 531, the key support level to hold is going to be down here at the 300-day simple moving average at 426, and then you have EMA4 at 475. It could pull all the way back to that level, which is almost it's a good 40 to 50% haircut there, and still have a super bullish chart. So keep that in mind. It was a big volume spike today, just hardly any volume before this move. Big move on MACD on both time frames. And so what you have to do when a stock is breaking out on the daily chart is look at the weekly chart to find resistance. And so as you can see here on this weekly chart, each candle represents 1 week of trading. And this week's candle will not set until the closing bell on Friday, so a lot can change between now and then. As you could see last week, it started the week below the middle Bollinger Band. It had been trying since October to turn the middle Bollinger Band into support and get a new uptrend going. And so this week's break above the 50-week moving average at 402 and the 100-week moving average at 624, the gold and green lines, is very bullish. It signals more upside potential. If it can close above 624 for the week, that would be a sign that this new uptrend is intact and that it wants to head higher. And then you're looking at the high close here from February is the key level to break. Okay, so that's like at just around $11. If it can close above that level for the week, then it could really get moving. There's not as much overhead resistance once you get above that $11 level. You've got the upper wick on this week's candle, which was hitting the open here for the second week of February in 2017, and then you break that level of 15 and it could easily head up there to 20. So this could really get moving. The weekly chart is showing some upside potential. Now if it pulls back below and it closes below that 100-week moving average, that's going to signal potential consolidation. It could pull back and test that 50-week moving average at 402 and possibly all the way back down to that middle Bollinger Band. So it really needs to stay above that 100-week moving average to signal that it wants to head higher. Okay, let's look at the CEI. Okay, very nice move today. Let's take a look at the candlestick pattern here. And what we have is a big breakout above the 100-day simple moving average here at 21. That's the gold line. Okay, so that's the key level to hold and turn into a support if the share price does pull back. Notice that today's close was well above the upper Bollinger Band. You have the upper Bollinger Band way down here at 22, and then just below it is EMA4, which is always your first support level on a pullback, and then the 100-day simple moving average is lined at that level. So 21 is a huge support level. If heading higher, the only way this is going to be able to break out higher is if it can close above this 200-day simple moving average at 34. It broke that level intraday and pulled back. We did a case study today in our chat on the 15-minute chart. Please come check out the chat if you'd like to see that chart. We broke it all down and showed what exactly to look for on how to trade intraday. And so it clearly shows 34 is a big resistance level. So it needs to get above that level. If it can close above that level for the week or for the day, and then we're looking at the closing price here at 40 cents, the high close in July. That's the huge level on this chart. If it can close above 40, that's going to signal it wants to break out higher. You have the 300-day simple moving average all the way up at 84. So there's major bullish implications if it can stay above that 200-day simple moving average, if it can close above and turn into support. If it can't break that level, that's just going to signal consolidation and could pull back and test the moving averages below. As long as that middle Bollinger Band way down there at 16 holds, the uptrend is still intact. Okay, let's look at MSDI. Huge move today, closed up 56%. Another big winner. Let's just take a look at the candlesticks today. What we have here is a break above the 50 and 100-day simple moving averages down here at 71 and 72, the golden green lines, and then it also closed above the 200-day simple moving average here at 90. So on a pullback, that's the level you want to see turn into support. If you look back here in July, it closed above the 200-day simple moving average. It failed to hold, and that signaled a big pullback. Well, in August, it worked its way back up to the 200-day simple moving average. But it failed to even close above that level and pulled back. So now this is the third time. It worked its way back to that 200-day simple moving average after a pullback, and it actually closed above, similar to this July move. Now it's caught up to where the 300-day simple moving average is above. That's currently at 113. You know, that was undefined when it was back here in July, but it needs to break above that level now. It needs to close above that 113, and then it also needs to stay above this August high close. Notice how it closed just above that level today. If it fails to break above $1, then that could signal a temporary top, and it could pull back. If it drops below that 200-day simple moving average, that would signal consolidation, and you might get a drop down into the 70s to test that 50 and 100-day simple moving average. Now, if it can break out above the 300-day simple moving average, then that's when it could really get moving. You do have the close here at about just below 130, about 127, 128. If you can get above that, then you could possibly see a run to test this high close at 170. So yeah, there was a big volume spike behind the move today. Yeah, really nice move. It just needs to turn that 200-day simple moving average into support and break 300-day simple moving average resistance. Okay, check out DGLY, closed up 25% today. It does have RSI in the bull zone with room to run. It's coming off of oversold levels on Fasto, and so this is a stock that's been in a nasty downtrend. Notice how back here in August, it failed to close above the middle Bollinger Band, pulled back once again in September, tried to break that middle Bollinger Band, pulled back. It got above it briefly in October, failed to hold that level, pulled back, and then here we go again. It's in November. It's above the middle Bollinger Band. It had the gap up open, which is always a big red flag. Look what happened back here. There was a gap up open. The high on this candle is the bottom of the gap, and the bottom of this candle was the bottom of the gap. And so notice the very next candle was a big red candle and filled the gap instantly and then continued lower. And that's exactly what the bulls do not want to see. I mean, notice that was on a big volume spike, and the next day was a red candle. You do not want to see a red candle and red volume bar tomorrow. That would signal downside risk, and it's all going to come down to 208 right now, the middle Bollinger Band. If it can hold this dotted purple line, that would mean it's in play. If it drops below and closes below, it will be a risk to hold. Look at this chart. This is a great chart if you're short, but if you're long, it's insane to be holding if the candles are forming below the middle Bollinger Band. So just be careful. You don't want to get caught holding the bag if you're trying to trade this. It has to break the 50-day simple moving average at 243. Notice how it tried to do that in October and it failed to. So once again today it broke that level intraday and pulled back. So it has to close above that level. If it closes above, that would be a bullish change in trend. It hasn't closed above the 50-day simple moving average in months. And then if that happened, it would put the 100-day simple moving average on deck. Notice that's lining up with the open from back here in October. So it could retrace back to that $3 level if it can get above the 50-day simple moving average. If it drops below the middle Bollinger Band, then it will no longer be in play. And then what you do is you look for the gap fill. And since this has a history of dropping lower after the gap fill, it may not bounce after that. It could keep dropping lower. It didn't pay on this one to play the bounce. It never got a reversal going. Just keep in mind, if you do play the bounce on a pullback, you want to time it using the 15-minute chart. So it's always a risk to enter a bounce play if the 15-minute chart is bearish. Okay, so take a look at NAK. This stock has actually a good uptrend going, and it's actually on breakout mode right now. So we're going to see if it can break out higher. It does have more room to run on RSI. That's good. When a stock is hitting that breakout level, and it's above 70 on RSI, it makes it a little tougher to push to that next level. But being at 63, there is room to run higher. Fasto is at 95, so it is at the temporarily overbought levels. But the good thing is RSI is only at 63. Check out ADX as well. Notice how plus DI just crossed over the minus DI, and how ADX just broke away from minus DI. Well, this is signaling the potential start of a new run. Okay, so if you've watched our charts, you'll see that some of the plus DIs on ADX some of the big runners, the shipping stock videos from yesterday. Plus DI was skyrocketing with a parabolic spike. This is signaling this is just the start. So that's a good sign for the bulls. This could be breaking out to the next level. You've got a PSAR bull flip. Notice the green dots flip below the candles. And then the interesting development was the close above the closing price here on the 12th of October. So notice how it closed just above that level. It needs to turn that level into support, and that'll be the signal it wants to head higher. Closing above that level today, that is the signal that's alerting us that it does have more upside potential, and that it wants to push higher. The next two levels to break are right here, just above 220, just 222 and this 225 level. This is going to be the next key level to break, 221, 225. If it can get above that, that's going to be a clear signal that it's ready to break out higher. So yeah, this is a nice looking chart here for NAK. It looks like it's got more upside potential if it can stay above that closing price there in October. And then if you look at the channel here, I'll just do that real quick for you, so you can get an idea of where this could be headed. It's always good to draw in the trend lines, and that way you can get a better idea. Now you can really visualize where the channel is. You can see here where the top of the channel gets hit up here multiple times, and then it pulls back and it hit the bottom of the channel, and then it came back and it hit the top, and then right now it's bouncing off of the bottom, and notice it's in the middle of the channel. So this is signaling that the next move could be up here. If you follow this trend line, this would be the top of the channel. So it could push up to this next level. That's what today's close is alluding to. Otherwise, if it fails to do that, if it fails to break above this 220, 222 resistance level, then the 225 resistance level, then that's going to signal a potential double top, and it could pull back just to the downside. If it breaks this 50-day simple moving average support level at 190, then that would be a major red flag signaling downside risk, and you can see the moving averages below tested. Okay, let's look at LODE. Nice move for LODE today. Okay, so what's going on? I'm not sure if you caught on, but some of the miners and materials stocks are moving right now. So there's quite a few penny stocks in that sector that are making bullish moves, and that tends to happen. You get the program trading going where they run the entire sector, or they'll bounce them at the same time, or and so right now we've got some action in the mining and the material sector, and so you've got LODE here on a really nasty downtrend again. Okay, super punished. It's been riding EMA 4 and 8 resistance lower, and then today it finally closed above that level. Notice how it hadn't closed above EMA 8 since back here in the first week of October, and then you really have to go back here until the last time it was above the middle Bollinger Band. It just can't get an uptrend going. It's just been struggling like crazy. This is a dead cat bounce play, a short cover rally. The bears have to make money sometimes, and when they cover their short positions, you get a little rally going. Sometimes the bounces are bigger than others, but what it always comes down to is this middle Bollinger Band, the dotted purple line currently here at 0.124. It has to be above the middle Bollinger Band for an uptrend to begin, because the bearish lower Bollinger Band channel, when stocks are in a downtrend, the lower Bollinger Band, the solid purple line, is the bottom of the channel, and the middle Bollinger Band is the dotted purple line. Okay, or the middle Bollinger Band, the dotted purple line, is the top of the channel. So this is the top and this is the bottom when stocks are going down. When it reverses and stocks go up, the middle Bollinger Band becomes the bottom of the channel, and the upper Bollinger Band becomes the top of the channel. And so it needs to get above that level to get the new uptrend going. And so if it fails to break that level, that signals more downside risk. So above 0.124, which is the middle Bollinger Band level, signals more upside potential, and it could run up here to 15. If it fails to break that level, it will be a risk to hold. There was a PSAR bull flip. Notice there was a PSAR bull flip for the first time. And then what's interesting is the volume, because it's got the volume spike, and so we'll see if that's going to set anything up, and it has the bullish crossover here. It's all going to come down to that middle Bollinger Band. If it can break that level, it'll be in play. Okay, let's look at JAGX. Okay, so this is another ugly chart. Yeah, so check it out. Just giving you an alert on this. It was just kind of interesting, I thought, with the long lower wick coming down here. So it looks like some people got lucky. I'm not sure if that was just a fat finger and it was just a single trade. Not sure why it dropped down to the what was the low of day, 10.5. But maybe somebody got lucky and loaded down there. And so the bottom line is when you see this type of pattern, a downtrend, a long lower wick with a big bounce off the bottom, and then the key is the volume spike. Notice how it was the largest volume day since all the way back here in October, since the big drop. And so this is telling us that potentially bounce players loaded. Big money loads at the bottom. Okay, so what it's going to come down to, once again, same thing. Notice that the patterns never change. The strategy never changes. The only thing that changes are these 4 letters up here. That's it. The only thing that changes are the ticker symbols. We just concentrate on the patterns. Geez, sorry about that. The only thing that matters is the pattern, and the ticker symbols keep changing. But what we're looking for, once again, on this chart is a break above this middle Bollinger Band, currently at 18 cents. Notice how many times it hit this level, multiple times. Once it finally closes above that level, that is your signal. Okay, this is ready to go. Today is our clue. It's heating up. It's really heating up. But once it gets above that 18, you could see a big run up to the 50-day simple moving average at 29, so keep an eye on it. All right, let's take a look at WWR. Okay, so this stock is another ugly chart. This is the ugly chart day, showing you some of these bounce plays. Don't always show these, because these are the ones that new traders get in trouble with. Okay, so be careful if you're new to trading. These are the ones that you become a bag holder. You think you're getting a good value by buying at the bottom, and then it drops, and then you don't sell quick enough, and the next thing you know, you're holding, and then they reverse split, and then you have nothing. And so don't let that happen. So the bottom line is you do not want to get caught holding the bag on these bounce plays. But our strategy is, once it breaks above EMA 4, notice how the candle's been riding the EMA 4 lower, the close above puts it in play. Okay, and so the stop loss level is EMA 481. As long as it stays above that level, it's in play. If it drops below, you have to exit. That's just the simple strategy. It has to break above EMA 8 at 83. If it can get above that level, then that's going to signal some upside potential. Fail to break 83, and then it's just not in play. It just looks interesting here with the big drop. You've got the big volume down here. That first they were the spikes. Notice the long lower wicks that I was talking about, accompanied with the volume spikes. That's what you like to see at the bottom. And then today there was a big green volume spike, the largest volume in months. And then there was a PSAR bull flip, the first PSAR bull flip since it dropped below the middle Bollinger Band. And then there was a close above EMA 4, and then right at EMA 8. And then you have the bullish crossover on MACD, and MACD 12.26.9 is pinched. And so it's heating up. So this is a bounce play. We'll see if it can follow through. Okay, let's look at ATOS. Okay, it closed up 8% today. This is another ugly chart bounce play. Same strategy here. Okay, so it pulled back. It's got this gap on the chart, and so it dropped down here. So I'll put make the lines in here real quick for you, so you can see the gap. So you've got the gap here. This is the bottom of the gap. This is the top of the gap, and many times what happens when a stock breaks above EMA 4, it will work its way back to the bottom of the gap. And so as long as it can stay above 39, it's in play. It's right at that level right now. If it drops below, that's the stop loss level, and then you have to exit. And keep in mind, you need to use, you don't need to do anything, but it's probably a good idea to use a mental stop loss if you're trading penny stocks, because if you use a hard stop loss, many times you will get they will hit your stop and take you out, and then run the share price higher. So just keep that in mind. Be careful with the penny stocks. They can be very tricky. And so so it needs to stay above 39. If it could stay above that level, that's going to signal more upside potential. If it's got to get above EMA 4 here or EMA 8 at 42, if it can break that, then the target's going to be up here at the middle Bollinger Band and the 50-day simple moving average at 50 and 52. So yeah, there's nice percentage gains back to that middle Bollinger Band. The bottom of the gap is at 55. 5, so it could possibly go back to that level. So we'll see if it can get moving. It did have a nice increase, not a big increase, but notice that it was a larger volume day than the previous candles. That's our clue that it's heating up. So you always want to have a volume spike. It didn't get much action. You know, it's not quite there, but maybe it will be tomorrow. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. All right, thank you very much.